Alright guys, so welcome back to my YouTube channel. So right now in this video guys, I want to show you my trade recap for last week. Yeah, so this is Euro GBP the 4 hours. I think I traded like 5 pairs last week, all on profit. Everything was on profit. Now, as the normal strategy that we all know, as a retail trader, what you have to do after your break of structure, wait for your pullback to the origin that caused the break of structure before the continuation. And now understand, always try to wait for your inducement before you take any setup. If you're not seeing inducement, or which is called enginal liquidity, don't trade it. You might still trade it, but you have to be very, very careful and very, very watchful, because these institutional investors and the big banks, they are not playing. So you need to be very, very smart, and you need to learn to think like them. So now, after your break of structure, you expect a pullback, then before you follow the trend, because if you look at the trend, it actually says, so follow what they are doing. Now in this pullback, I caught my entry here in my 4 hours order block, because I work with my 4 hours order block. My strategy is very, very simple. Break of structure, pullback to 4 hours order block, the continuation, wait for inducement, the continuation, I'm good to go. So yes, my 1:3 was. I will show it on the screen. You'll see it. This was Euro GBP. Let me show you Euro AUD. I also traded Euro AUD. This was the first one. I missed this entry because there was a break from here. Then I was expecting a pullback. I caught the 4 hours order block before. Yes, I took an entry. I was on profit, but it did not get to my 1:3. So when price was coming back, I actually know that yes, this is these institutional investors, they need a lot of liquidity before they can move this market. So I had to push set break even here. So when price took me out, I was like, okay, since 4 hours order block did not work, let me wait for 3 hours order block. So I was waiting for them here, but they did not trigger the order. That was why I left this trade. So I missed out on this one. Then I caught this one again last week. Now after this break, there was a break here. After this break, now you need to wait for pullback. But now, with this aggressive pullback, this high is just telling me that this place is called liquidity, because this place is a high. A lot of orders, they are resting on top of this place. And now, what now gave me the confirmation that yes, this order block is going to be valid, because after this break of structure, this 4 hours order block, it has not been mitigated. Price has not got into this place. So now, when price did the whole manipulation, and when it was coming back, because of the aggressiveness, which is the momentum of how it was coming, normally remember that after your break of structure, you need to expect a pullback to your 4 hours order block. Then you wait for inducement, then before you take your trade. Now, this is the liquidity or the inducement that you will call it, but I will call this liquidity because this is more like a high, because there was a break from here. So I was expecting it. So I was waiting for the price here, because this 4 hours order block has not been mitigated. It's still showing that it's very, very valid. So when price got to this place, just trigger me. I do trade my 1:3, and that was how I hit TP. But all this trade, they took 1 week. They took 1 week before they could hit my TP, because I'm a swing trader. So now I'm still waiting for this setup. Then gold, yeah, I traded gold last week. I traded gold also. I think I hit stop loss around this area. I hit stop loss here. So when I hit stop loss here, my mind just told me that yes, since this 4 hours order block is not going to be valid around this area, this 4 hours order block, since it's not valid, then the next one will be valid. Change of character has not occurred. I've seen this kind of manipulation many, many times, so I've learned from it. So it's not going to work. But it worked. This change of character, it worked now. But man, go don't show me paper. I don't go lie for you. I will show you the trade. I will show you the trade on my screen. Now I have to wait for the price here before I can go in for my buys. And my 1:3 hit. So which other pair? USD JPY last week. I also hit TP here. After break of structure, expect price to fall back to 4 hours order block. Then before you move, see it. Very, very simple. Under this low is called liquidity. Under this low is called liquidity. So this was the first 4 hours order block. This was the second 4 hours order block. I'm supposed to go with this one, but I go with this one because I was thinking that price will not get to this zone. So I just said, okay, let me just put my entry here. So immediately when I saw price, but I just put my stop loss under of this low because you have to be safe. You have to play very safe. If your stop loss is not under here, if you put your stop loss under this place, they will take your stop loss. Because I know that this other block, it might be valid, it might not be still valid, but to be on the safer side, I just calculated my risk and put it under of this low. So when you see, when I took my entry here, price did not just hit my stop loss, you just play to the first of that block and move. So my 1/3 hit here, very, very simple. Don't forget, after break of structure, pull back to the origin that caused the break of structure, which is the 4 hours, then wait for inducement. This was the inducement that was telling me that this 4 hours of that block is going to be valid around this area. So that was I caught on this. Then GBP JPY, I also traded GBP JPY. Yeah, my 1/3. This one is very, very easy. This entry here, I missed this entry. This entry, I missed this one. I could not take this one because this low was liquidity low, so I was expecting price to take out this low, tap into this my 4 hours of that block and before the run, but price did not tap into it. These big banks, they know what they are doing, all these inner cabals. So I missed this entry, but this one I caught this one. Same strategy, 4 hours of that block, price tap into it and boom, my 1/3 hit. Very, very easy. So as a smart retail trader, what you have to do, master your structure, stick with your risk management plan, and you are good to go. You know what I mean? So you need to learn to think like the big boys in the market. First thing you need to do once you open your market, once you open your chart, go to your higher time frame, look at the structure, look at the trendy structure, and go with the trend. Now, as a smart retail trader, what you have to do after your break of structure, expect a pullback down to the origin, which is the 4 hours of that block that causes break of structure, then before the continuation. Then one of your big confluence that you will need whenever you are trading your pullbacks, which is the continuation, you need your confluence of your inducement. If your inducement is not there, that 4 hours of that block will not be valid. In fact, the inner cabals will use that 4 hours of that block as engineer liquidity to sweep out your stop loss then before it runs. So you need to wait for inducement. You need to wait for inducement first before you know that, okay, yes, that 4 hours of that block is valid. If you're not seeing inducement, you go nowhere. So it's very, very easy. After your break of structure, pull back to the origin, which is the 4 hours of that block, then inducement, then you swing your trade. You are good to go. Apply your risk. You're on the journey. So if you find this very, very helpful, guys, do well to like, share, comment, and engage. You know what time it is. So see you guys in our next video. I'm going to be doing some analysis, and I'm going to be teaching you guys on this my YouTube channel on how to understand the movement of these big banks. You understand? So it is what it is, man. Cheers, mate.